We recorded this little recap session yesterday, and we got a lot of good feedback on it. So turning the recorder on, stand by. Okay, so what we wanted to show here this morning is some trades that's set up on the equities here. I personally like to trade the EMD. I just have an affinity for it now. It's really moves very smooth and clean and nicely, and I just really pick good spots to get in. It really pays off. The volatility now is just fantastic. What I wanted to start showing over here is this is a Pacific time. I'm here in California, so the open of the market was right here. Just to orient you time-wise, 6:30 Pacific, open of the market was right here, and this is the head fake that Gary was talking about right here. This little head fake right at the open, right before the open. So it looked like it was going to break to the upside, and then it hit its head strong resistance up here just above 94. Right here, see it? Right there. Yeah, we want to avoid those head fakes right around the open, and you can see quite the opposite happened here. It flipped and rolled, and then you got some yellow bars, and it just broke down big time right here. Now, what I wanted to show is this. Even if you didn't catch this early short here, let's say you missed that, okay? Notice that right here between about 6:33 and 6:40, and this happens a lot. You're going to find that right before like 6:40, 6:45, you get a little pause in the market. You know, and in this little box here, it was not clear whether it was going to bounce and go up or rip and break down. We had an inclination that it was going to rip and go short because our background was red. We were looking for a short break, and of course you had a nice, beautiful short trade set up right here at you had a pretty clean line here. It's 83.50 right here. See it? See how it just bounce and test, bounce and test, bounce and test, and then it breaks it actually right here. So this was your opportunity to get short and catch the rest of that drop right here. See it? That would have been your short order right there. In fact, I believe we called it and took it. I took it, and it was a beautiful short, just ripped straight down. And then, of course, you see it stopped down on this little bounce here, right around 6:45. Took you out at 75. Just to give you a sense, let's say you didn't get short until 84, just round numbers. Okay, call it 84. Call it 83. All right, 83. You got filled, and you got stopped out at 75. Call it 75, somewhere right in here. This one trade on one contract alone would have been somewhere around $800. This was 80 ticks. Just 80 ticks straight down. That's why after those shorts, you heard a lot of traders in the room saying, you know, one and done, or, you know, I took two trades here, boom, boom, and I'm out. But even if you didn't get that, say you missed this one and say you missed this one, all right? Notice how we bounced here. Did not take out the bottom with this little jaunt here. Bars turn yellow. And what I want to show is this. I'm going to really blow this up. This is just textbook breakout bounce trade right here. Notice that you get a thrust like such. See, the market comes off of that little swing. Here's the swing low, 73-ish. Come down, test it, 73-ish. And then we get this thrust, and we get a trend change right here. See it? And this is why we were talking about that bounce. Remember we were talking about the bounce? See how quickly it bounced? 6:45 bottomed out, 6:45 bottomed out, 6:45. Here we are, 6:50. So about 5-10 minutes later, we come up. Now, what I want to show is this little retracement it took right here. See this? See how it took a little retracement, and then you had a very clear breakout area right here, just 78.50 right in there. There was your buy right there. You could put a limit order there. You can hit a market order. Right as soon as it broke that resistance coming off the probe, that was your entry point right in here. Buy order right in there. Strong green background, blue bars, green stealth. Now, even if you missed that entry, okay, call it 78.50-ish right in here, you had another thrust, and this is just textbook financial market moves here. Thrust, and then you get another probe back in here, and I think Gary was calling this out on the Roosty. Roosty was doing pretty much the same thing, and so was NASDAQ. Here's your textbook probe retracement into support. You get support just a tick or two under that 81 level right in here, and then you get a resumption of buying and a breakout here. So even if you miss this initial breakout, you normally get at least one or two chances to get back in for another thrust. All right? Let's call this breakout here. Let's use a round number. Let's just say 79. You could have got 78.50. I can't remember where I got filled here. And then you got stopped out and call it 89. So what is that? Here, let's just call round numbers, 79 to 89. Let's just say you got filled in here and you got taken out right here. This one trade alone, say you didn't get any of these other shorts over here, was one contract, 100 ticks. That would have been a $1,000 bill. Just this one trade right here, this one long trade. This breakout here and stopped out here. Trailing the stop with the stop dots, trailing the stop, taken out here. Did anybody take these, by the way? Did anybody get these? Just either on Roosty or Nazi or EMD as we were calling them. Anybody take these? Mark, these recordings I'm going to email out to everybody in a couple hours. Anybody take these?
Looks like several people did.
All right, good deal. I'm seeing some coming in. I see EMD. I see a couple Nazis, YMs. Good, excellent. Now, okay, so here you had an opportunity. You could have made $500-600 on that one, $800 on this short. You could have got a $1,000 bill out of that one. And now here's an important thing. Let's say you missed all these. All right, we always say that you can sometimes get caught in the chop. Now, there was some follow-on trades here, and Gary was calling these on the Russell. Here's a yellow bar probe with a break. So when you have a strong uptrend, we were saying the Dow was pushing up to fresh highs. Here's another break. You wanted to be taking these all to the upside, right? This was not actually a short. By the way, we say that we keep an eye on an 8, a 10, or a 12. I'm going to show you this right here, why you would not have taken a short on that little jaunt back. On a 10, this is what a 10 looked like at the same time on that pullback. Can you see the 10 here? I just put a 10 up.
Yes.
Okay. So this is what when we talk about this, when you look at the longer range charts, I forget, I think it was Mark was asking earlier, how do you visualize a trend on a longer range chart? Well, here you can see clearly on the 10. I have this on another screen, and I keep an eye on it all the time. That as far as after about 6:48 is concerned, you were pretty much going straight up till 8 o'clock. Okay, so all these little retracements, all these little pullbacks into support were all probe trades to the upside. See it? Likewise over here, of course, when the market broke down, we were trading the short side, yes? See it here? You're trading the short side. We bottom out, we bounce, and then we trade the long side. So for instance, over here, let's get this chart out of the way. And by the way, the characteristics we look for in a trending market is a stair-stepping kind of look to it. All right? See how the market is stair-stepping down like you're going down to the basement? See the stop dots and everything dropping? See here we're stair-stepping up. Higher highs, higher lows. That's the definition of a trend, of course. Here, let's do it. Let's contrast that area with this area right here. See these two areas, the short and the nice long? How about this area right here? Pre-market overnight. How about in here? Was this market trending? Would you say that market was trending inside of that box? Just looking at a 10? No. Here you can tell, for instance, the market is, it's going up, it's coming down. I mean, it's a big range, and if you're, you're looking at probably a 50, 60 ticks range, this is tradable, but you can tell here it was not trending. You see the difference between this box and this drop and this bounce here? See it? That's how you can visualize a trend. Everybody see that? Danny, do you see that? Everybody see the difference between this area here? So when you come in any market, overnight, pre-market, after hours, whenever you like to trade, say you're not in the room here, and you're trying to determine if a market is trending, what you do is you simply look at the highs, you look at the swing lows, you put a little line, you could draw different things in here to visualize it. And if it isn't breaking those swing levels to the upside or to the downside, well, then you're not trending. And then you have to make a decision. Am I going to scalp in here? Am I going to take some trades? Or am I going to patiently wait for a nice trend break like such? Personally, I'm not a good scalper myself, truth be told. I like the trends. The trends work for me. I like the breakouts, the probe trades. When they set up, they're real clear. You get great volatility and you can make money. In here, I tend to get chopped up, so I try to avoid those areas. Now, let's come back over here. Let's get any questions on the 10. An 8, a 10, a 12, they all kind of look the same. The bottom line is you're trying to identify important swing, support, and resistance levels, and whether the market's trending or not. And if you have the screen space, it's perfect to stick this on another screen, tuck it away over here to my left on screen 4, and I just keep an eye on it. But this is your trading chart, okay? You can trade a 4, a 5, or a 6 depending on the market you're watching. I like a 6 now because the volatility is so huge that I don't get sucked into these trades here, because this was clearly not a short. It was actually setting up a deep probe to the upside, which here again I think Gary took on Roosty. He was watching Roosty. They all were doing pretty much the same thing. Here was your final poke up right here, right after the high energy time. You had a high energy time coming right up here. We get another probey. Here we have kind of a little bit of an ABC pattern. Here we have a starting point, 94.50. A, B, C. We pull back. We get support here just above 90. And we get resumption of buying, and up we go. This was kind of the final push to fresh highs. Right in here. Now see how you wanted to be trading the upside here? You just wanted to be taking long trades off of probes, long trades off of probes, taking breakout trades. Here's another little probe. You get lots of places to get in. And here again, if you'd caught the 2, well, actually technically there were 3. We had 2 shorts and a long here, right? The fact of the matter is, if you'd caught the 2 shorts and the long, I think everybody would have been done, right? You wouldn't have to chase it up at those highs. But even if you missed those, there was a nice little follow-on trades here, especially this little run here where it broke 94. Remember, we said if it breaks 94, it's going to go to 800, which it did. It hit right on the button here, remember? So that trade alone at the tail end here was about 50, 60 ticks. One contract on EMD would have been about $500 plus or minus. Just this one right here. Just that last trade right there. All right, so let's see what happened after that. Here we get another poke up, and then it looks like it's going to sell off, and now we're getting a bounce back to the highs. So what I'm saying is that with all these earlier trades from earlier in the morning, you don't have to chase this around now. We're done. You take 1 or 2 trades, you make your coin, you hit your goal for the day, whatever that is, $500, $600, $700, $800, $1,000, whatever the number is, and you're done. You don't have to chase this around. See here, we might break out to fresh highs. This actually turned out to be just a very deep probe to the upside here. I mean, in this particular little channel here, by the way, you could have taken a quick short of this break. You can trade both sides of these. You get enough volatility here to actually do that. You could have taken a little short there, or you could have taken the probey short here. And then, of course, if you were just patiently watching this, you could have taken the break up here, which actually pushed it back up towards the highs of the morning right in here. See it? I think that's it for my recap today. Any questions on trading the equities this morning? Just put in a fresh high, by the way.
Let's just do it again tomorrow.
Sounds good, Gary. Any final questions before we wrap? Mark, well, what we try to do here, obviously that Viper, we're here to provide, a market analysis in the live trading room. And the tools, of course, all the trading tools and the pro package and the indicators. And then, of course, the webinar is where we teach it. So we're really all about empowering traders to make money every day. That's what we're about. So now you have a Fed announcement at 11:15 Pacific. So I'd be very careful trading the next couple hours, by the way.
Rome, on your question, Rich actually stepped away. Rich, are you still here? I think he stepped away. He had some people at his place doing some work, and he needed to guide them to make sure they did it right. But we'll get those indexes. The website that he was talking about for the indexes, we'll get it for everybody tomorrow. That'd be okay? And there's no webinar tonight, so everybody stay nicely green. And if you want to trade, trade, but use the way we teach it, and I think you'll stay on the right side of the trade. Those are some beautiful trades, by the way. Many trades today were great.
Yeah, the key is, like anything, when you're learning a new skill or a new trade or anything that you're picking up on, it's practice, practice, practice. The more screen time you can get in front of these charts, just sort of training your eye to look for these setups. And if, like I said, I think sometimes, it's like that old saying, Ika hula una, or whatever it is, simpler is better. You don't need to have 18 charts up, okay? Really, I'm telling you, you really only need a couple of charts. And then what you do is you just really train your eye, and you look for these cherry-picking spots to get in. And you'll see them. Over repetition, they will become clear. And you'll just see them, and it'll be crystal clear where to get in and take the trades. The more you watch the market, the easier it will get. Pick one or two instruments to watch. Like I said, you don't have to have 8 screens up. The only reason we have 8 screens in the room is because we have folks literally all over the world trading all these different markets, and so we have to kind of help everybody. But if you just pick one or two and become an expert, what you do is you start off with one contract, and then eventually you can ramp up to 2 or 3 or 4 or more. And then once that point, we have traders in our room that just trade NASDAQ, but they'll put 6 or 8 contracts on, and they become experts in trading that market. For instance, I love EMD. I don't know what it is about this instrument. I just really have a feel for it. So just pick one that you like, or 2, and then be very careful. And when you see these little setups, go ahead, pop in, take 1 or 2 contracts, and ride the momentum. Ed asking about the Fed announcement. I think Rich stepped away for a minute. There's a lot of speculation that the Fed, it's going to be this QE3, or how many bullets they have left in the gun to really pull things out. I'm personally not going to trade it. I find that sometimes you could get some shotgun. See, right now, for instance, we're kind of consolidating. It's pushing up to the highs. We might get a breakout in here, and it might continue to push higher. It's hard to say. But, you very well might remain kind of in a 50, 60 tick range. Fed comes out, you shotgun a little bit. I would give it at least 5 or 10 minutes after the announcement if you're going to trade it, kind of like we do with crude oil inventories, and then look for a nice, clear direction if you're going to take a trade. Okay, nice clear direction if you're going to take a trade. What indicator? Breakout math? I'm not certain what breakout math is, Kevin. Do you know what he's referring to there?
I answered that one for him. That's
you did? Okay.
The
right.
math pivots. I showed him.
Okay, all right. All right, good. All right, Kay, anything else on the recap? Are we done? I'm going to go ahead and stop the recording.